Hello and welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma. With me, as always, is Cheryl D'Souza. And Cheryl, yet again, we are seeing that the market is not holding on to the gains right now because we are definitely off the day's highest point.
Absolutely, we are off the day's highest point. Broader markets are the ones that are under pressure. But let's talk about Praja Industries because they came out with their numbers. And the stock is reacting to the numbers, but it was an inline quarter. But what actually contributed to the number in the quarter gone by? Let's bring on board the management of Praja Industries. We have Mr. Shishi Joshipura, who's the MD of Praja Industries, joining us on the show this morning. A very good morning to you, sir. Thank you so much for joining us on ET Now. And let's talk about your numbers in particular, because revenue growth, although sequentially, it was strong, but it is muted on a year-on-year basis. Order intake also has actually fallen below that 1,000 crore mark in Q4. If you tell us what led to this, why are the order inflows not picking up?
So if you look at the year's result, a very significant shift has taken place in the segments that we serve. As you know, the whole ethanol industry in India under the EBP20 program, the initial major driver was the capacity being created by the sugar companies. And then the starch-based projects started to come in. Due to two major policy changes during the year, one related to issue of price from the FCI, and the second related to ban on use of syrup and molasses B as feedstocks for ethanol generation, led to a situation whereby it clearly impacted the capacity creation, new order finalization, as well as execution. And that probably is the one major shift that happened during the year. However, what we saw that all the initiatives that we had taken, anticipating that we need to start moving into different segments of markets, has also started to yield results. And that's why you see that although there were a very major segment was sort of came to a halt, it still led to a situation of an order book which is near the mark that we have always maintained.
Hi, very good morning, Mr. Joshipura. This is Shrishti also joining in. Onto your financials, if we see your FY24 revenue, then that stood at 3,500 crores, but that's actually a little lower than your guidance of 4,000 crores. Now, what are the reasons for that? If you can highlight some of those for us, as well as the revenue guidance for FY25, what will that be?
Well, we do not issue guidance at any moment in time. So we had not issued a guidance for 24. And as a policy, we will not be able to issue guidance for 25 as well. However, if you look at our order book at the start of the year, it is a healthy order book at about 3,800 crores. And that should augur well for the year as we move forward through it.
Right, your margins in the quarter gone by stood at around 12.8%, and that's at the highest level actually we've seen in the last several quarters for the company. Do you think that this is sustainable? 13% margins, can we expect Praj Industries to post going ahead?
Our effort has been, and we have spoken about it over the past 4 or 6 quarters, that our effort is to start improving our margin profiles through a different set of levers. We are also helped by external environments such as moderation in the commodity prices, etc. But we have also taken several steps internally to enhance the value that we are delivering to our customers, the segments that we are serving, the markets that we are serving, our product mix. So margin is a result of all of these initiatives that we took, and certainly helped by the fact that the commodity prices have held.
All right. Also, Mr. Joshipura, now that the sugar production estimates for the full year has been revised upwards, now the government has the headroom to carry the blending program under juice and B-heavy route. Do you expect the government to ease the restrictions on the use of sugarcane for ethanol production? And what is your outlook on the bioenergy segment?
So overall for bioenergy, I think that things will continue to develop in a very, very positive manner, not only in India, but also outside India. Within India, the EBP20 program is at about 12.5%. So we still have a lot of mileage to cover. And we are sure that as we move forward into the new regime, we will still continue to see a buildup of this. The sugar production being positive is a very, very good sign. And we do hope, as rest of the industry, that this will enable the incoming government to actually decide on a policy direction that is favorable to ethanol.
Right. What's your outlook for the engineering and high-tech business? And I'm asking this for a period of about 3 to 5 years. What sort of an outlook are you envisaging for those businesses? Also, what's the strategy on expanding the revenue share from both of these segments?
So two things we have said that our modularization effort and offering in the market is finding a very large traction, and we are beginning to see some very important development. We have just spoken about a very important order we bagged for building a blue hydrogen project in Europe, which is actually indicating the shape of things to come. The modularization entire modularization effort that we have made, not only for engineering projects outside India, but also extending the modulation effort to ZLD offerings that we have, is finding a very positive traction. So we expect that this business will grow leaps and bounds as we move forward into the next 3 to 5 years period. Security system business that you talked about is also on a very strong turf now. They have actually built some very unique applications for their offerings, and we believe that as we move forward through the next 3 to 5 years, they will be in a position to combine their offering of ultra high purity water with fermentation capabilities and process system capabilities to actually create unique solutions for the industry. They will also be helped by the fact that India is looking forward to creating a semiconductor industry in India, and the water requirement for semiconductor is very similar to pharma. So we do hope and believe that will augur well for our business.
All right. Also, Mr. Joshipura, you have been focusing on increasing the share of your international business from like 18 to 20% currently to like 50%. So what are your plans for that? Also, because international business is margin accretive, how much margin expansion could we see, say, over the next 3 to 5 years?
So our international business has shown a very strong growth at about 60% over the last year. And one of the reasons for that is that we have started to offer our offerings into different markets as well. Brazil, for example, we just commissioned our first project there, and now we are engineering for the second one. The low carbon ethanol opportunity that is emerging in the United States is becoming very positive because Praj has a very unique solution to offer in that space, which does not rely on carbon sequestration, but it still lowers the carbon intensity of the ethanol, which is likely to be used for SAF production. We are also expanding under the GBA program. We believe that as we move forward the next 3 to 5 years, India's leadership in GBA will help us offer our solutions to the global south, where the focus is. We believe that in other parts of the world, especially Southeast Asia, where we will see, and Europe, where we'll see emergence of 2G as a technology of demand, because low carbon ethanol will be in high demand owing to the SAF production. So that's one. Two, our modularization efforts that we are making with some of the leading players in the world in the energy transition space, where we have gone through our investment on Praj GenX, our new investment in the Bangalore facility. We will see, we are already seeing a very strong inquiry pipeline that is developing there in this space. So we see these two leading our effort into internationalization. We have already stated that our aim is to go to a 50% international and 50% domestic kind of a split between our revenues as we move through the next 5 years. And we are very confident that we'll be on that path. As you can see, over the last 4 quarters, our order book has started to change, and the last quarter saw almost 39% of our order book come from export orders.
All right, we'll leave it there. Thank you so much, Mr. Joshipura, for joining us on the show to talk about Praj Industries, the quarter gone by, and what's the outlook going ahead. Thank you so much once again for joining us on the show. And on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we will begin the techie special of edition of Buy Now, Sell Now. So viewers, don't go anywhere. Our technical analysts are already waiting by. Today, we have the Techie Special show where we will take your queries to our technical analyst. Today, we have Kunal Bothra as well as Hemen Kapadia joining us on the show to make sure to help you with all your short-term queries, all your technical analysis queries that you'll have. We have today Kunal and Hemen, the best in the business, to solve all of those queries for you all. Very good morning to you, Kunal, as well as Hemen. Thank you so much for joining us on this very special episode of Buy Now, Sell Now. And let me kickstart with the queries that are already pouring in. This one is coming from Edwin. He's writing to us from Kerala, and he's holding 430 shares of Adani Wilmar at a price of 542 rupees per share. He's holding this counter for the last 2 years. He wants your view coming in on this stock. What should he do? Hemen, coming to you on Adani Wilmar, what's your view on this one? He's 542 is his buy price.
A very good morning to you. Thank you for having me on the show. It's the stock is going nowhere, but I don't think it's a sell. We've been moving sideways for what 3 and 3.6 and almost 9 months, but the bias is neutral. It's not negative. I believe 320 breaking in terms of closing could set the alarm bells ringing, but nothing positive can happen till it takes out 420. But once again, I don't think it's a negative formation, so I'd say hold, keep your eyes on these levels, but till 420 doesn't get taken out, it's going nowhere.
Moving on to the next query. The next query, Kunal, is coming from Umesh Gupta from Vadodara, and he wants a suggestion that which amongst the Ratan India group of stocks is the best for the long term. Ratan India Enterprise as well as Ratan Power. Ratan India Enterprise is quite seen to be consolidating, but Ratan India Power is definitely on the roll. So any of the stock you still like for a long term?
See, Ratan India Power is a very circuit kind of an oriented stock. So, it may look very attractive when it's going up, but then on the way down, whenever that correction happens, exiting these stocks becomes a lot more tricky. So, I'm not sure whether you're just keen into buying this group itself. You may consider buying, Ratan India at current levels of 70, 73. I think it's coinciding or just coming back towards its 200-day moving average. That could probably mean that in case if say in the next 1 week if the market stabilizes and the stock doesn't break below its critical moving average by a huge margin, then you may probably expect that the stock may get into a revival. So the risk reward to enter could be attractive. Ratan India Power you can play as a momentum stock, but then as I said that because it's a T group name as well as a penny kind of a stock, you may have to be very cognizant of the kind of volatility which the stock may exhibit over the medium to long term.
All right, this one is coming from Rohit. He's writing to us from Pune, and he has ITC in his portfolio, and shockingly he's one of those investors who's making a loss on his holding in ITC because he bought it at an elevated price of around 436 rupees per share. He wants to know what's the opinion on the stock now, what should he do, what's your take coming in on this? Hemen, ITC, seldom have actually heard anyone say they've made a loss in this one, but yes, we have a viewer who's bought this at an elevated price. What should he do now?
Cheryl, depending on the time frame, if it's a long term, we have a shorter term short today, but it's a long term hold and it's a buy on declines. We're at 437, we're at 427 now. It's in a longer term correction. A target would be something closer to 600, but this is probably a 2-year view. Extreme near term, I don't expect anything spectacular. Having said that, I don't see a bigger downside either. So if it's a short term view, you can exit for the time being. If it's a longer term view, closer to 400, it's a buy.
All right, moving on, and Hemen, once again coming to you. This query is on BEL. V. Venkatesh wants a suggestion on BEL. How is the short-term setup looking like for this one? He's already holding the stock from a price of 294 rupees.
Well, like most of the market, it's a bit stretched, it's a bit tired. It remains in an uptrend on all time frames. But this recent move from 220 to 300 odd, the stock is consolidating for the 6th trading session by moving sideways. Going nowhere, don't expect a big decline. But yeah, it's sitting on top of a humongous rise. I think you keep a stop loss of 285 with a shorter term view. Longer term, it remains safely ensconced in an uptrend.
This one is from Naman Deora, who's writing to us from Kolkata, and he has 3 stocks he's asking a query on, but one of them is recently listed, so I'll not ask that one to you. So he's asking about Cupid, 900 shares at a price of 134 rupees per share, and the next stock is On Mobile. He has that one at the price of 108 rupees per share, about 3,500 shares of that particular counter. What's your outlook for till December end for these counters?
Both for from that kind of a time frame are exit because both these stocks are struggling below their long-term moving averages. In fact, specifically for On Mobile, that stock has been struggling below its long-term moving average specifically over the last 4-5 months. I think the stock had broken below this level closer to 100 mark in the month of January and February start. and from there the stock had fallen down to as much as 60. So it still looks like the stock would take a lot of time to get into a recovery unless it breaks past above its 200 DMA, which in the near term looks a bit more tricky. I would probably expect that the stock could remain into a drag mode. Even for Cupid, I think the stock, pre the special situation had almost touched levels of 3000 plus, and towards an adjusted price, it's almost at 135, 137 in that kind of a time span. But the stock had moved up almost 10x in a span of I think less than 1 year. And after such kind of a stellar uptrend, you may probably expect that the stock may broadly consolidate, even correct. So nothing exciting in the near term for the charts. And since you are a short-term investor, short to medium-term time frame investor, I would suggest to exit.
All right, that's the take coming in on a couple of names. But Hemen, the next query is specifically for you from V. Murli from Bangalore. He wants a suggestion on two counters. Firstly is DB Corp. Can he buy this counter at a price of 280 rupees or rather 300 rupees that is showing right now? Other than that, what's your view on Hutco? The company did post a good financials this time around, but on the technical front, would you advise for a buy here?
DB Corp quantifies as a buy. The way I see it, we've gone 6 months in a time price retracement. The bigger picture remains unequivocally bullish, nothing to worry about. The level, I would say, just spread your purchases because volatility is not past us, and we still have a event risk in a couple of days. So we're at what, 300? Anything closer to, I'd say buy it at 290 and maybe 255. One can expect a price, but once again, it's not a very shorter term view because after 6 months, 7 months, you're going to take time for it to go up. So yeah, only if it's a long term view, it's a buy. It's a very clear buy. In terms of Hudco, one gets the feeling that it's had a humongous run. Currently, if it's a shorter term view, stop loss at 245. We've had a very strong run, so I would say keep a strict stop loss and then quick entry, quick exit sort of a scenario.
All right, this one is coming in from Yuvraj from Bangalore for you, Kunal. He wants to know which mid-cap IT stocks can he buy in this correction and which of the charts are showing that the stock is on the path of reversal. He also wants to know which sector will outperform after elections.
See, it's going to be a high beta space. My assumption is that you've already calculated the the risks associated with the sector because of the way the sector has behaved over the last 2 years, and the expectation that if the US market continues to remain into a bit of a iffy scenario, then you may probably expect the IT stocks to continue to drag for some more time. But I think looking at the charts, the near-term prospects, the recent recovery, Coforge is something which has started to look a bit more attractive at current levels. Yes, the stock had rallied up from 4,400 to 5,250, 300 mark in the last, I think, 3-4 weeks. It's come back towards 4,900 mark today. So I think the risk reward, the balance for the stock is a lot more better this time around. And hopefully if we get a retest again of that 5,300 mark for Coforge, we may expect that the stock may get into a breakout as well as a decent uptrend over the near to medium term.
All right, moving on to the next query, and the next query is coming in from Radha from Bangalore. And Kunal, she's been holding Jio Financials from a price of 343 rupees. What's the outlook on Jio Financials as well as ITC? She's holding over 300 shares from a price of 441 rupees. What's the outlook in both of these names?
See, at Jio Finance, you can continue to hold on if you're a long-term investor. Of course, the chart history is a lot more limited for me to try and suggest on a longer term basis. But the rally the stock had shown the last 5-6 months from, I think, the November levels or October levels closer to 200 to 220 mark, towards a point when the stock had almost retested or touched the 400 mark. I think 394, 395 was the high for Jio Finance. So I think in that sense, at current levels of 340, the risk reward is a better for medium to long term investors if you have that kind of a time frame. So I would suggest a hold on the stock. And the second stock which you mentioned was
ITC.
ITC. So I think even for ITC, I think long term wise, I would suggest a hold. Yes, it's gone through a patchy phase in the last 3 quarters from, I think, August highs of 496, 497 for ITC. But I think at current levels of 400, 420 approximately, I think it's a very good buying zone. You should continue to hold on.
All right, this one is coming from Gayatri, writing to us from Chennai. Wants to know about Reddington as well as IPCA Lab. She's contemplating on buying this one, Hemen. What's your take? Makes sense to go ahead and buy both of these counters for the short term, or buy and stay put for the long term also?
Reddington doesn't quantify as a buy for the short term. Uh, it is in a shorter term downtrend, and it's probably in an intermediate correction as well. So I would wait a bit if I were to buy Reddington. And from a longer term point of view, yes, you have 195, 182 levels where you can probably buy Reddington India, but only and only from a longer term point of view. And the other stock you mentioned?
Collabs.
Okay.
Ipca Labs, yeah.
Downward bar reversal setup has just got spoiled not only in the daily chart but also on the weekly charts. It's probably entered a correction of a greater degree, I believe. So I would say keep away from the counter for the time being. Let it settle down. Support comes in at 1160. 1100 and 1040. Resistance comes in at around 1230. Stay away. Absolutely not a buy at current levels unless you want to play for a very small 30-40 rupee bounce. Setup has got spoiled.
That's the take coming in on Ipca Labs, one of the earnings candidate as well. But with this, viewers, it's time to slip into a very short break in this edition of Buy Now Sell Now. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, and let's keep it going with all your stock related queries. Then we have two of our technical experts for today, Kunal Bothra as well as Hemen Kapadia with us. And the next query that I have, Kunal, is coming from Sridhar from Coimbatore. He's planning to buy PG Electroplast and wants to know how is this stock looking on the charts, as well as any support and resistance levels that you wish to highlight.
I think it's an excellent chart when we look at this on the weekly, monthly time scale. Even in the last 3 months, from the March lows of 1600, the stock has done exceptionally well, moving towards 2500, 2560 mark. The good part about the stock is its resilience nature. When the stock gets into an uptrend, the uptrend is much more stronger, sustainable for PG Electroplast. I think in that sense, you may continue to buy the stock at current levels, but a better strategy over here is to wait out for that dip phase of dip or a correction and then look to average further. It has this tendency of coinciding or coming back towards its 100, 200 moving average. So I think that could be a much more better price point if you're looking to buy. But you can start at current levels, maybe 25% of your expected quantity at current levels, and in case if the stock corrects towards its 100 and 200 moving average, look to allocate further capital.
All right, this one is coming from Himanshu. He's writing to us from Pune and he wants to know about L&T 3800 call option June expiry. The entry is 86.5. Hemen, what should he do?
L&T call option 3800, 86.5. I'd say hold. And we are heading towards somewhere around 3840. The previous all-time high comes in at around 3860. So we're coming closer to that. So anywhere between 3820 to 3860, he'll be slightly in the money, and assume time erosion of the call option will not be much. I say that's where you can book profit between cash market level 3820 to 3860.
All right, Hemen, what's your view coming in on Landmark Cars? Vivek from Delhi is holding 2,000 shares at a price of 720 rupees. Even this stock has seen a phenomenal run-up from the low points. But after the earnings, there was indeed some profit booking on the counter as well. So Vivek is at a loss at this point in time. What to do? Should he continue to hold on or maybe look out for some better opportunities?
I think he needs to look out for better opportunities, because we've had a prolonged distribution pattern. We moved sideways, and it's breaking down now below 656. I believe the correction could get deeper. So I'd say you need to sell on bounce or exit either way.
All right, this next one is coming in from Ramamurthy, writing to us from Bahrain. Kunal, he wants to know about Serra Sanitary as well as CG Power. If we can look to buy these counters at current market price, he's saying he can allocate a good sum of around 2 lakh in each.
So Serra Sanitary, I would suggest avoid at current levels unless the stock breaks past about, say, levels of I think 7,800 to 8,000. It doesn't make sense because the stock is still into a downtrend. On the other hand, if in case if the stock dips down towards say 6,400, 500 mark, that could be a good price point where you may look to start entering into the stock price. So keep these levels at play. CG Power, on the other hand, I think could be an interesting play because the stock has done exceptionally well in the last 3-4 years. Even at 630-40 levels where it's trading right now, the stock still looks to be onto in a fine fettle as such in this kind of a scenario. So I would probably expect the subtrend to continue for much longer time. So you can go for a buy at current levels, but add-on dips would be a better strategy.
All right, moving on to the next one. And Kunal, what's your view coming in on Natco Pharma as well as Dr. Reddy's? Though the pharma space has been underperforming a little bit, and especially Dr. Reddy's. But Balakrishna from Chennai wants to know, any of these are a good buy to enter afresh at this point?
So I'm not sure whether you're looking at just two names out of the entire pharma pack. Natco Pharma could be a better stock relatively out of the two names which you mentioned, because that stock is trading much above its 200 and the 50-day moving averages. So there's a lot of cushion as well as a buffer into the stock price trend over the near to medium term. From the other pharma pack, pharma stocks, if you're looking at, then I would probably recommend something like Glenmark Pharma at current levels, as well as a Biocon. I think at 300, 310 odd range, I think Biocon is also very attractive in terms of the positioning on the medium to long term chart. So I would probably recommend these two names and out of the two which you mentioned.
Okay, this one is coming in from our viewer Rishabh, who's writing to us from Chennai. He wants a view on IRCTC. Hemen, 200 shares, the buy price is 704 rupees per share. He wants to know whether he should hold or book profits in this particular counter.
Once again, the bigger picture remains Cheryl quite bullish, not a worry. And near term, we are getting oversold support at 990. I think he should hold. In case he needs the money, he can sell it on a bounce back to around 1000 plus. But longer term picture is the hold, shorter term it's a sell on bounce.
All right, moving on. And Kunal, Sharmishta from Kolkata, I guess she's writing to us for the first time, has bought 500 shares of Wipro, but her buy price is 550 rupees. What we have seen is that from the whole IT space, this has been one of the key underperformers. She wants to know, what is the price target for the next 3 months?
See, I think it's been an underperformer. You rightly mentioned it. The concern for Wipro's chart is yesterday the stock, I think after a period of almost 5 months or 6 months, had broken below its 200-day moving average, which means that near-term wise the stock could remain under pressure. So today is more of a relief rally for the stock price, but effectively if it continues to sustain below the 200 DMA, I would believe that the stock would probably get into a further continuation or a correction mode. So just be wary of your position size over here. If it's too uncomfortable in terms of the, it's too high in terms of the position size, and I would probably believe that it makes a lot of sense to try and reduce your position size over here till the time the stock doesn't come back above its 200 DMA, which at current levels is around 448, 450 mark for Wipro on the spot levels.
All right, this one is from Mr. Singh. He's writing to us from Pune. He wants a good entry level for PCBL for the longer term. What's your take on this one? What sort of an entry level do you think would be right for PCBL, Hemen?
I think one can start at current levels, but once again, keeping the market and everything else in mind, I'd say spread your purchases 235, 220, 200. Three levels where one can buy in bits and pieces. It's had a 4-month correction, a decent time price retracement. So yes, I think we are probably in the last legs of this correction. So it is a buy at these levels.
Right, moving on. And Kunal, what's the long-term view on GSFC as well as Infibeam? Rohit wants to know, can he buy any of these stocks today?
I think both these stocks are avoid from my side. I would probably believe that both the charts are quite weak. I think GSFC, if I'm not wrong, has broken below its 200 moving average, I think last week or in the last few trading sessions. That itself indicates signs of weakness on the medium to long term charts. Infibeam is a very high beta stock. So you may probably have seen the recent rally for the stock from, I think, 20 rupees to 40 rupees. But look at the time the stock has gone into a drag from 40 rupees back towards 30 mark. I think it's been consolidating, correcting for the last 4 months for itself. So it doesn't make sense to buy both of these names. I would suggest an avoid.
All right, this one is coming from Srinath, who's writing to us from Chennai. He wants to know whether he should go ahead and buy Bharat Dynamics as well as Bharat Electronics at current levels. Also, what sort of a short-term target, if you suggest a buy, what sort of a short-term target should we keep in mind for both of these counters, Hemen?
Frankly speaking, Cheryl, from a shorter term point of view, after this move, is almost like mission impossible. But nevertheless, we're at around 5150 as far as BDL is concerned. So I would say buy at around 1411 with a stop loss of 1350, target of 1650 plus as far as BDL is concerned. BEL, I think similar view. Setup is positive, though BEL does look a shade better than the BDL. So buy at around 285, stop loss 275, target 305. Shorter term target simply because there could be upheaval following the event risk share.
All right then, moving on to the next query, and Hemen, once again coming to you to have your take on two of the tire counters, Apollo Tyres as well as JK Tyres, where Shaurya from Gurgaon is holding Apollo Tyres from a price of 500 rupees and JK Tyres from a price of 400 rupees. Since after the earnings, we haven't seen like great set of numbers from both of these companies, and there are some other concerns as well. So what's your take? Can he continue holding this for the next 1 year? Or maybe book out some loss at this point?
Okay, it's a very specific question for 1 year. So I would, even then, I would say if you have an intention of holding it for 2 years, which is not a question, only and only then you hold. And if it's your 1 year time frame, I'd say exit because we've had a move from 160 to 550, which is a 2 year move, and Apollo Tyres seems to have exhausted that, and we've entered a correction of a greater degree. So it's going to take some time to play out. And the other stock that you mentioned was JK Tires. I think slightly similar view, run up, retracement. It's going to take some time. Long term charts still seem to suggest that this is a correction within a bull market. Same advice if it's a year time frame, sell on bounce. With a 2 year time frame, hold.
Okay, this one is coming from our viewer Bhuvaneshwari, who's writing to us from Chennai, and the query that she has is she wants to know which of the counters that she's listed below are a good buy for a period of short term, and what's the right price to buy. Kunal, IOB, Tata Power, Natco Pharma. Which one of these counters do you think is the best buy right now for her?
So I think given the market positioning, these stocks, the previous performance for these names and the prospective upside these stocks could probably have in the near to medium term future, I would probably believe Tata Power could be a better bet. But I think maybe closer to 410, 420 range could be a much better range for the stock. This also coincides with the March or the April lows for Tata Power, where the stock had bottomed out, at those kind of price points, and from there on started a fresh rally for itself. So I think that could be a good entry point in case of the stock dips down to those kind of support territories.
All right, but with this, viewers, it's time to slip into a very short break. But before we go, here's your chance to take advantage of market swings after the exit polls. On the 3rd of June, top chartists and market experts on ET Now will share their stock strategies to help you navigate any election-related volatility. We will ask our chartists which stocks, if they fall by 5%, will be on their buy list and which stocks they will sell if those rise by 5%. Stay tuned to ET Now all throughout the day for the best poll positions.
Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get you answers for all of your stock-related queries. Today is the Techie Special, so let's continue taking all of your technical queries that we have then. And this one is coming in from Ajit from Bangalore. He wants to know if Puravankara as well as Bharat Bijli are a good buy at current levels. Kunal, what's your take? Its time period is 3 to 6 months.
So Puravankara, I would suggest an avoid at current levels. It's gone into the ASM, or the T2T group series. So I think that since the stock has been could be into a bit of a drag mode, it may probably get back into a corrective phase around the 300 mark. So I think that could be our better buying territory for Puravankara.
All right, moving on. The next query, Hemen, is coming from Vikram. What's your view on IRFC? He wants a suggestion if he can hold IRFC at current market price. He didn't share at what price he bought this particular counter, but given the run-up, do you believe that there is more steam left in IRFC?
More steam left, yes. Time frame longer. I'll just briefly run through why. Uh, we posted a high of 192.80 on the weekend at 25th June, 25th Jan, and we went to 192.80, exactly same level this week. So we come to its previous high. It's natural we are going to walk into a wall of resistance. Does it take time to overcome this or slips into a correction? I'm not sure, but if it's a slightly medium to longer term, I think it's a very clear hold because a further upside above this level is a cinch.
This one is coming in from Praveen, who's writing to us from Kerala. And Praveen wants to know about Electra Green Tech, Kunal. 1900 rupees per share is the buy price. He's saying that he's suffering a huge loss on this one. What should he do? Apart from Electra Green Tech, the other counter that he has in his portfolio is NLC India at the price of 238.
So, Electra Green Tech as well as NLC India, I would suggest to hold on to both of these names. Now, it's possible that these stocks may drag a bit more because the immediate supports for Electra Green Tech is just around the 200 DMA, which could be around the 1500 to 1550 range for the stock adjusted towards time. So, I think that could be a better price point if you're looking to add further for the stock. And even for NLC India, I think the stock has gone through a triple retest towards the support. The key support for the stock is around 205, 206 mark on the spot level. So I think closer these, the better these stocks closer to the support, I think that's where you could probably look for a buy or maybe an average also if you are looking to allocate more fresh capital into these names.
All right, moving on, and the next query is for you. Krish wants to have your take on Blue Star. Amidst the scorching heat, all these companies related to the AC manufacturing are seen no stopping, and Blue Star has also seen a good run-up, even in today's trading session as well, holding gains. Krish has bought 100 shares at a price of 1453 rupees. What is the medium-term target on this one?
We're at all-time highs, frankly speaking, Srishti. Not very many levels to go on. The stock is in the midst of a 23-year uptrend and counting. So if I were to extrapolate some of these figures, a medium-term target, two assumptions. One, it doesn't close below 1470. Two, it closes above 1555, 1640, 1690.
Okay, this next one is coming in from a viewer that is on Vodafone Idea. This one is for you, Hemen. He's got Vodafone Idea, 19,000 shares at a price of 11 rupees per share. He disposed it off at the levels of above 14.65 because of fear of losing the profit. Now he wants to know whether he should re-enter considering the AB Group credentials. At what levels do you think that he can look at buying this particular counter? What's your take? He's already booked good profits, but now does it make sense to re-enter this counter?
It's underperformed over the years. There's some newfound vigor in the stock, Cheryl. So it does quantify as a high risk category. But yeah, so 1440, 1380 are two levels where you can look to enter. Possible exit targets are 1640 and 1730.
All right, that's the take coming in on Vodafone Idea. Moving on, and Kunal, what's your view on five-star business? Krishna from Bangalore wants to know, is this a right time to enter this counter?
I think it's a very interesting chart. I would probably believe that the stock has a lot of higher probability of scaling past about the previous resistances and giving a breakout, because the amount of time the stock has spent in this range of 750, 700, say plus minus 50 odd points from this kind of a range in the extreme. I think it's been a fabulous chart as such. I would believe that the stock has a lot of potential. You should be looking to buy the stock at current levels, and in case if it dips down to that lower end of the range which I'm talking about, say closer to 700 mark, that could be a very good point to accumulate further for the stock over the medium term.
All right, Kunal, coming right back to you once again, because this one is coming from Santosh from Mangalore, and he wants to know why is Parag Milk Foods shares falling continuously. Anything on the charts that are indicating this sort of a fall in the stock price over the last few months?
Nothing as such on the charts which is specifically turned for the stock in the last few months, because I think from a point when the stock was at 275 approximately, just about in the month of February, the stock was at the verge of a multi-month, multi-year breakout for itself. But yeah, I think the recent leg of correction has been met with a higher degree of volumes, and specifically the volumes start to increase up higher when the stock had broken below its 200-day moving average just about, I think, the last 3 weeks or 4 weeks back. So I think that's where the intensity of sell-off has increased for Parag Milk. It looks like that the stock is going through a corrective phase right now, but sooner or later the stock would probably get back into an oversold nature of indicators. So I would suggest to wait for a bounce if you're looking to exit at better levels.
All right, but with this, viewers, let's kickstart taking all your queries in the rapid fire session. And Hemen, the first query is coming from Poonam, one of our regular viewers. She has bought 50 shares of Piramal Enterprise from a price of 803 rupees. What to do in this one? Wait or exit?
Hold with stop loss of 780.
Kunal, Satya sold Motherson Sumi, switched to Motherson Sumi wiring at around, but the point he's saying that after he did the switch, the charts are looking opposite. Motherson Sumi wirings has been falling and SAMIL has been increasing. What should he do now?
I think if possible, if you have fresh capital, then allocate it back towards some of the Motherson.
All right, Kunal, what's your view on India Bull Real Estate? Dr. Zenith has bought these shares at a price of 133 rupees. What's the target for the short term?
Short term target, I would probably keep it closer to 148 to 150 range.
Alright, Siddharth has IEX at a price of around 223 rupees per share. Hemen, he wants to know whether he should average out by buying more or keep holding what he has.
I think it's worth happening.
All right, Hemen, your view on IFCI? Sanjeev wants a medium to long term view on this particular counter. He didn't share his buy price, but just on the technical front, any outlook that you can share?
Well, it means it is an uptrend of sort. So I would say hold and it ups in at around 80.
Alright, this one is coming from Raman from Thrissur. Kunal wants to know about IDBI Bank. He bought this 4 months ago, about 20,000 shares, and it's been declining ever since. Should he hold or look to exit and instead look to buy Yes Bank?
Continue to hold on to the stock.
Kunal, I have to come to you for this query. This one is on Aditya Birla Capital that you have been tracking. Michelle is holding 1,000 shares at a price of 194 rupees. Can hold for the long term?
Absolutely, yes.
Alright, this one is coming in from Vijay. He wants to know about RS Software for a period of 1 year. Can he look to invest right now on this one, Hemen?
Nope.
All right, that's the view coming in on that particular counter. But with this, viewers, it's time's up in this edition of Rapid Fire Session. Thank you so much, Kunal, as well as Hemen, for joining us today and helping all our viewers resolve their stock-related queries. But before we go and wrap this show, viewers, here's the news Farafat edition, specially related to the election world, wherein amid allegations by the Modi government that INDAI bloc does not have a PM face, Congress Jairam Ramesh clears the air, says India bloc would be ready with a PM pick within 48 hours of coming to power. Odisha's longest-serving CM Naveen Patnaik quells rumours on successor, says a confident VK Pandian won't be his successor either in the government or within the party, claims people of Odisha will choose his successor.
And as we count down to the final and the ultimate phase of Lok Sabha polls, tomorrow all eyes are on the exit polls, which will start trickling in post the polling is over around 6:30 p.m. or so. But we at ET Now will bring you the most cutting-edge analysis and insights of the exit poll in a special coverage that will begin from 6 p.m. onwards tomorrow. So don't miss it. With that, we come to the end of this week's edition of Buy Now Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. Thank you so much for watching. Stay tuned. Markets at noon coming up next.